So I want to thank everyone for joining the call. I'm excited to kind of go through and answer the questions in a free form. So just hop on, ask whatever you want, and happy to just go through it. I wanted to start with some of the history of how we got here and the work that has been done to date to kind of set the framework. Originally, when we got introduced to Celsius and Ionic during the bankruptcy proceedings, there was a goal that they had to sell all the mining assets. There was about 127,000 miners that they had and four facilities totaling 87 megawatts. It was a 12 megawatt site, a 25 megawatt site, a 20 megawatt site, and a 30 megawatt site. This was also during the bear market, so it was kind of end of 2022 and beginning of 23, where if you were to go and liquidate those assets, you probably would have realized $40 to $60 million on the miners, about 2.5 to $5 per terahash at that efficiency, because no one was really buying miners at that time. They were more looking to sell. And if you were looking at sites, that was probably another 40 to 50 million based on 87 megawatts at around 500,000 a megawatt, which was also higher than where the markets were at the end of 2022 and 23 because there were more sellers than buyers of assets. So there was a bidder that came into the transaction, No Wolf at the time, who was a stalking horse bid, and the idea was let's turn this into an operating business where we could create more value from building a business than liquidating the assets, since the public miners were traded at a premium than what the resale and the liquidation kind of value of this equipment was. And so we got involved because we looked at that and said, we think we can offer basically a more economical managed services agreement and that we could execute with the background that we had. And then that's kind of what was the formation of the company Ionic. Originally, it was more of a holistic crypto company rather than just a mining company. But I kind of towards the end of the bankruptcy process, the SEC came out and said that they weren't supportive of having this holistic company. And that's why we refined kind of the scope to being Bitcoin mining. And then around the same time, when we kind of won the bid process and before Celsius came out of bankruptcy and Ionic was formed, Celsius and Core Scientific were suing each other in both of their respective bankruptcies, right? So both companies were bankrupt. They had a lot of lawyers that were billing high billables, and they were basically suing each other because of the claims they had against each other. And so I basically asked the question of like, why not work to find a resolution here, then spend a lot of money on legal fees and just kind of fight each other for an infinite amount of time. So we had a previous relationship on the Hut 8 side with Core Scientific and help basically bring the principals together and ended up working a productive deal where they both dropped kind of the claims and litigations they had against each other and instead of spending money on legal fees, they basically said, you know what, we'll forego those and we'll basically give you Cedarvale from core to Celsius and Ionic. And now Cedarvale is one of the kind of core assets of Ionic. And it's a 250 megawatt site compared to the 87 megawatts that they had across four different facilities. And so there are many things in the agreement that I know has been talked about pretty publicly that were driven by those kind of negotiations during that bankruptcy process in favor of Ionic during the bankruptcy process. An example that I've kind of seen a lot of folks talk about is a $395,000 per megawatt cap. That's not a budget. That's a cap that we can't exceed. Otherwise, we're penalized for exceeding that cap for the first 400 megawatts we built. The reason we say that the reason we said that was because during the bankruptcy process, we saw a lot of kind of our peers and miners building air cooled facilities for 500 to 600,000 a megawatt, and we said, hey, we can build a site with really high efficiency and operating well, and we can do it for cheaper. And instead of just trusting our word, why don't we put our money where our mouth is, and we'll be penalized, and it'll be in our contract if we exceed a cap of 395 per megawatt. So for Cedarvale specifically, we actually reduced that cap by about $70,000 due to the purchase allocation of the Core Scientific Celsius transaction. And so that new cap is around $326,000 instead of 395 in terms of like cash we can spend. And remember, that's just the cap. That's not the budget. And we're currently on schedule on that project, and we're under budget. We also have a similar cap with like operating expenses. All of these obviously agreements were public through the bankruptcy. And so we committed to saying we could operate efficiently and at a low cost, but we also wanted to contractually show our obligation to keep ourselves accountable. So that's where those numbers came from. And I want to kind of level set what those were, because I think it's come out as like, oh, this is your budget, this is what you're building for. I think first that number is more competitive to the market, and we basically were willing to commit to that rather than just say that and say we'll do that, choose us. And so when we got involved, Celsius Ionic had 87 megawatts during the bankruptcy when we first kind of got involved in the process. Um, and today, it has that plus a large site, Cedarvale. Over the course of this last kind of less than a year, we've helped Ionic bring their total megawatts owned and operational from 87 megawatts to 140 megawatts operational today. So that's 40 megawatts from the 16 VUE containers that we energized earlier this year. And then that's 50 megawatts from building one that got energized earlier this summer as well. And so we'll go from 140 megawatts to 190 megawatts within the early part of this month. And then we'll bring on another 100 megawatts by end of November, December time with the two additional buildings. And if we don't bring those buildings online by December 17th, we also start getting penalized by not bringing that online as well in our contract. And so from a miner perspective, since kind of Celsius Ionic was hosting with third parties as well, we went from 58,700 miners kind of when we got involved during the bankruptcy process to now having 94,272 miners online. With building two coming online within the next week or so, that'll bring the total miners online to over 109,824 miners. And then we get up to 125,000 miners with building three, and that's about 12 exahash. So that's like a really big scalable miner. And then there's more infrastructure being built out that Ionic can look at buying new machines or hosting with building four. And so it has definitely not been an easy road since we've gotten involved and have been kind of building through this process, but we are indeed executing. And we apologize for not showing more of that journey throughout the year. We didn't really believe it was kind of our place to do so. At the end of the day, we're the managed services operator for Ionic, so we can only do so much. But I decided it was time to try to be more transparent and got a blessing from Ionic CEO John to be more responsive as well. And so that's kind of a part of this Q&A session. So now let's open it up for Q&A to answer any of the questions you have, and I'll answer what I can. Okay, we got Celsius Facts now.
What does the payment of Ionic Digital provide by HUD?
Definitely, and I can share both kind of the original agreement from like a cost perspective and kind of the upgraded agreement, because Ionic shared that we had that agreement amended as well. So the original kind of idea behind the agreement, the managed services relationship, was when you look at a lot of kind of the miners that exist, and a lot of them are publicly traded, many of them have very high SG&As in running those businesses. And so our thought was, okay, at HUD 8, we've already built the infrastructure of operations, mining ops, network operations centers, EPC build out, software team. And instead of Ionic having to go rebuild all those and take on that SG&A, and that was kind of why we built the managed services business, which was like this idea of this Costco model where we can build the foundation and sell these services, was that it would be cheaper for Ionic to hire us to execute and be kind of the foot soldiers on the ground, executing on building out the facilities, managing the miner uptime, managing curtailability. And so that's how we kind of envisioned it, where Ionic would run strategy, capital deployment, and would be able to hire HUD 8 to basically execute on the sites in terms of building, operating those sites, and we would be able to help on strategic direction, right? Originally in the agreement, I was a part of the board, and we can talk a little bit about why I stepped off of the board, but our job now is to help execute in regards to the actual build out of the business. So if you guys see kind of in the bankruptcy, there was actually an appendix in there that had a list of all the things that we would do under our agreement. And so there's a list of over a dozen elements, and I can kind of go through some of them quickly, but managing oversight and strategy for the company's Bitcoin mining assets, use and integration of managers' proprietary miner management software and reporting generation software, which includes repair maintenance tickets, total site parameter viewing portals, automated site infrastructure monitoring for Bitcoin mining. Third one, managing all Bitcoin mining facility owned by the company as of effective date. Four, managing strategy and management of all Bitcoin mining equipment located at the facilities owned by the company. Five, managing subcontractors on site, supervision as well as overall compliance. Some subcontractors include, but isn't limited to, security services, maintenance vendors, auditors, tax consultants. Six, Customer contract management will be performed by the manager through his hosting team. And so if they wanted to get into like the hosting business, we would manage those, the customers, and the relationships there. And so manage like local dynamics in terms of law or governance and permitting. Helping put together kind of books as well for them on site operations and things of that nature. We've done that for our other partners under the managed services agreement as well. Maintaining and training all staff in accordance with the standards at all their facilities, creating standard operating procedures and managing them. And so I can go through all of this, but I think you guys can see that, and I can kind of share what was publicly available before as well. But there's a long list. But overall, the idea was, instead of going and having to hire, I mean, Hut 8 today has about 250 people. Instead of having to go hire all those people and have a large fixed SG&A overhead, be able to outsource a lot of that and build off of the infrastructure we had and be able to drive more money invested into miners, invested into Bitcoin, and drive that return. Because the original contract was $20 million, where it was kind of like a buffet model. No matter how much Ionic grew, we got paid the same amount. So that really became more and more economical over time. That has since kind of been restructured to $15 million, so it's $5 million cheaper. And then we get kind of incremental growth on that agreement down the road, and it allowed them to kind of save burn in the short term for that and kind of align interests on growth. So overall, kind of the idea, which I believe still holds, is it's probably cheaper and less execution risk to be able to use us than basically building internally. And I think you can validate that by looking at the SG&A across all of the public miners, including
Yeah,
ourselves.
so basically to help scale the company in a faster way, right?
To help execute, right? So be the
Yeah.
soldiers that go and execute, not make the decisions on what the company does, but if the company decides we want to buy the site, we want to build, we want to operate, to go and execute on doing so. Like building one, for example, is online. It's at 98% hash rate efficiency and 99% online for the first building. So, I mean, we're excited by what we're executing on and doing for the company.
Does Ionic Digital has like a small maintenance crew that do they have a staff in case something happens with HUD that they can basically maintain the current productivity or something like that, or is everything dependent on HUD at this point?
No, they keep us accountable, right? I think accountability is extremely important, both within their own teams that they've built internally and also through different kind of owners reps that they've brought on. So there's definitely a mechanism of accountability, and they like have the data that we go through on a weekly basis. They see how it's operating and so forth.
What do you see the paths for growth, scale, and profitability in terms of Ionic Digital?
Yeah, so look, I think this is my opinion. This opinion is not that of Ionics nor Hut 8, but this is kind of my opinion. I want to kind of be clear about that since I'm not on the board there and we're kind of managed services. I think the company is well positioned because it has 12 exahash, which makes it still a competitive company. And even more importantly, now it has over 300 megawatts of owned infrastructure that's valuable, right? Especially in this age where power is extremely valuable and extremely sought after. And so I think like the biggest thing is there are shareholders in the company that want liquidity and may or may not want to be a part of the company. So a path towards liquidity and going public, I think, is critical for the shareholders. And from the perspective of the business, I think it's just to be very thoughtful and frugal on how they spend the money and how they spend growth, and doing so in a way that's thoughtful, right? And so I think when kind of we get asked for these questions, we'll give kind of our advice and how we think about strategy. Hut 8 has taken a very different approach towards growing, which like we just talked about the Bitmain deal, which allows us to bring self-mining on without having to deploy a bunch of capital up front and be able to see where hash price goes during that period of time. And so I think if you look at Ionic as a company on its own with 12 exahash, 300 megawatts, and kind of a low SG&A burn, like it's competitive. It now needs to be able to kind of propel its ability to get into the public markets, give liquidity to its shareholders, and kind of growth on the company as well. And so that's kind of my own personal opinion.
In the case of Cedarvale, do you know if it benefits from the same types of economics, especially when it comes to the renewable market? Okay.
Cedarville is in West Texas, so it's all within the West Load Zone. So I think we ran like a backcast of last year using our curtailment software. If you ran on a 24/7 basis, cost of power was, call it around like 5.8 cents or something. And then if you ran it with 8% perfect curtailment, it dropped your cost of power under 3 cents. So, and that's primarily driven by the renewables in the area and kind of the volatility of high peaks and troughs and being able to curtail off of those peaks. So Cedarvale gets the benefits of being able to kind of manage that volatility and drive price down.
What is the end goal of AI? Do you intend to, like, in your vision, is it possible to mix Bitcoin mining and other sorts of data centers monetization?
On Hut 8 side, we think about our business in three distinct layers. The first is power. So power infrastructure, powered land, and us owning interconnects and access to power availability. So that's really important. The second is the data center layer. So that's building data centers for both AI use cases and for Bitcoin mining use cases. And so that's extremely important for us as well, where we're building data centers to propel return on investments on sites that we believe Bitcoin mining fits well with because it doesn't have the right fiber access or the right power dynamics. But we're also building data centers that are for AI customers, and there's a big difference there, right? You're spending anywhere from, call it, $300,000 to $400,000 a megawatt building a Bitcoin mining data centers relative to $8 to $10 million for an AI data center. So that's kind of the second layer, which is we're developing data centers and we either will have our own chips that we put into those data centers or we'll have customer chips and co-location and hosting agreements. And then the third layer is owning compute. So that's owning ASIC chips for Bitcoin mining, and that's owning GPU chips for AI compute. And so for us, when we're looking at building data centers, like the first kind of 1,000 H100 cluster, although it was a $40 million investment, it was 1.5 megawatts, and it's 1,000 H100 clusters, which is a very large, powerful supercomputer. But that's also different than our current kind of ambitions on building multi-hundred megawatt AI training data centers for large scale customers. And so we think the compute layer is important. One, it's an interesting opportunity. Investors want exposure to it, but through direct investments as well. And then second is like we've always found that by deeply understanding power, infrastructure, and compute, we can build a better and more optimized solution. And so I think when we look at kind of the AI space, there's people that really understand the compute, people that really understand the data center, and people that really understand power. And I think we found a lot of traction in being able to kind of understand the three of them, find that intersection, and be able to execute. I think if we think about that relative to mining, because we owned our own self-mining machines, we end up being a better hoster and being able to execute and deliver on those and being able to manage service on behalf of others. So that's why I think having exposure to all three are important, but definitely building and owning AI data centers is a part of our strategy and a part of a lot of where our time is spent. For Cedarvale specifically, the reason why I said that like you can't just plug those miners out and put in GPUs is it's a different type of build and infrastructure, right? Cedarville is built under $400,000 a megawatt, and it's built for Bitcoin mining. If you're building for AI, you're going to be building for about $8 to $10 million, and a big part of that difference is one on like first of all like just the formatting in terms of structures. Like you don't like you have data center halls and you have you're not having kind of these rack structures, but really most of the cost is in kind of the redundancy. So UPS systems, which are the battery systems, generator backups, redundancy across the whole chain. But I mean, this site is a very similar design to Core Scientific site, which they are retrofitting those data centers with the core we've been adding more capex into, right? So I say that what we're building now isn't for AI data centers. It does not mean that this site cannot be used for that use case, but more so not wanting to mislead people that you can kind of just plug out an ASIC and put in a GPU in the same infrastructure.
You're saying that basically, geographically speaking, the West Texas does not block any sort of AI exploration, right?
I
It's
mean,
more about the infrastructure that you have.
there are projects being built out there. There's a lot of fiber being built. It depends on the ultimate kind of end user and customer in which kind of long haul paths that they need to route back to on their fiber access and how many kind of different paths and routes that they need. But there's definitely a lot of demand in on sites being built out there, and so West Texas is an active market for this type of infrastructure.
From what you said, I have understood that You initially bought all the miners and stuff, and you had a plan to sell them off.
Sorry, so let me clarify. The kind of opening was in regards to Ionic and Celsius specifically, not Hut 8. And so these are not Hut 8 machines. So when we basically got involved in the Ionic and Celsius situation, Celsius was bankrupt, and Celsius had purchased 127,000 Bitcoin mining machines back when it was not bankrupt. And so during the bankruptcy, they had the option to either sell the machines or form a new company, which ended up being Ionic. And because at the time selling the machines, you wouldn't get that much value for them because they were older generation efficiency at around 31 joules per terahash. They felt like there was more value in building a business and monetizing those than just liquidating them into the open market. So I just wanted to differentiate. Hut 8 does not own those machines. Hut 8 did not buy. Hut 8 does not decide to sell. This conversation, this Q&A is primarily around Celsius and Ionic and our partnership with them and us managing their assets.
Oh, okay, okay.
All right, Keith, lay it on me.
Yeah, sure. So you've touched on the paper power for Cedarvale, but in court filings with the ERCOT, the reliability standard FAC 002-2 had still not been completed. And additionally, the TNMP systems improvement process had not been completed, and that is a primary reason why Core was unable to secure their power, as New Mexico Power was unable to supply
Yep.
that energy. So there's been no update from any parties on if the NERC reliability standard testing has been completed, or if they've even gotten authorization for the power that's on paper.
Yeah, no, good question. So in West Texas, call it in 2021, a lot of miners applied for basically front of the meter interconnects, and a bunch of them kind of got approval. And then that's when ERCOT created the ERCOT Large Task Force, and they came in and they're like, whoa, 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 there's way too much load that's being approved. Like, and the TNMP was a big part of that in West Texas. And they're like, let's pause on that and let's go and reassess these and see how many megawatts are actually available. So a lot of actually access to that power got pulled back. And so with Core, as a part of the negotiation with them, they had an allocation of a couple of hundred megawatts of power and that they could allocate because it was all within West Texas in the same region that they could allocate between the sites that they had. So as a part of the deal with Core Scientific and taking over Cedarvale, they allocated 215 megawatts of the allocation that they had towards a site. So the site today has 215 megawatts that it can energize. In the future, Ionic is going to apply for more power availability to further expand if it chooses to do so, because this site was built to potentially be much larger before when Core first started. And so that, like, also obviously, like, it would have been impossible to power 90 megawatts on that site today if there was no power availability. And so that's why we've been able to energize that site and continue to energize.
So just a quick clarification. There's what they have an allocation, yes, but New Mexico Power couldn't actually provide and supply that, which was the main restrictor. Has that been resolved?
That's been resolved because they had many sites in West Texas, and like Texas, New Mexico basically said, "Hey, we can't give you all the power we told you. We have a restriction. We can only give you this many megawatts." And then they had to allocate how those megawatts got spread. I don't know what the exact numbers are, but I'll give you an example. If they had gotten approved for 800 megawatts, let's just say Texas, New Mexico came back and said, "Hey, you can have 400. You decide how you want to split it amongst your sites." So a part of the kind of the settlement agreement between Core and Celsius, they allocated 215 megawatts of that allocation to Cedarvale. So Cedarvale today can power up to 215 megawatts through TNMP.
Gotcha. Additional question I got, and I'll try to wrap this up because I know other people want to ask. You've talked about being on schedule, but we've been monitoring the build out process through satellite imagery now since April. Building 2 is not has not been completed as of yet, and it's been almost 10 months. What is leading you and the team to believe that if you couldn't finish building 2 in 10 months, that you can finish building 3 and potentially building 4 in 3?
Yeah. So I think a couple things. The reason why I say on schedule is we've had a schedule that kind of got approved in order to build and apply. So like obviously that schedule is not made public, and Ionic hasn't made that public. In regards to buildings 1, 2, 3, and 4. Let me give a little bit of background here. So when we took over the site, it was kind of like part built. There was a lot of work that we had to do and actually like changing some parts of it, reordering some of the steel, etc. So building 1 and 2 were actually longer because we had to make changes in order to get those to be operational. There were shells that were built that we had to adjust in order to kind of bring online. Building 2 is coming online this month, so that'll be energized soon, and I'll share kind of on my Twitter or X when it does become available. And then building 3 and 4 are well underway as well. And a lot of that is long lead time equipment as well. It's ordering the long lead time. It's doing a lot of the kind of the ground civil work and designing a lot of the infrastructure relative to it. So if you think about kind of the phases of bringing this project online, there's 16 VUEs that were split into 2 phases, 8 and then another 8. So that's 40 megawatts. So we first brought 20 megawatts on, then we brought another 20 megawatts on, taking us to 40. Then we brought building 1 on, taking us to 90. And then we're going to be bringing building 2 on, taking us to 140. And then building 3 and 4 will be in November and December. And like, look, December 17th, we don't get them online, we get penalized $1 million a month for not getting them online, up to $6 million for the 6 months, right? And so, like, obviously, we're very aligned, incentivized, and like we have conviction in our ability to execute.
Appreciate it. I'll let somebody else ask some questions.
Thanks so much, Keith. We don't. I don't think we have anyone else. You want to keep on asking questions?
Yeah. So Lily put out a good question for you a few days ago, and I didn't think a response was giving. So when you all invested in shares into Ionic, it conveniently also aligned with the purchase price from USBTC for those containers. Can you explain why it appears from an outside perspective that basically Ionic themselves bought you the shares by acquiring those containers?
I'm not sure what those dollar amounts are, but I can kind of give. I do not believe the dollar amounts are the same. I can get you the exact numbers and share it on my Twitter Spaces or my Twitter afterwards to you or message it to you. But I'll kind of break down both of those. So investing into Ionic, that was a part of our negotiation during kind of the bankruptcy process, which was they wanted us to have skin in the game, not just as kind of a paid managed services operator, but as a shareholder of the company as well, right? So we had to invest over $12 million into the company at the planned value of when this thing came out of bankruptcy, which was around 750 million or so, in that range. And so that was the investment into the entity. As a part of like we spent weeks going back and forth basically in an auction trying to bid like what we could bring to the table, right? So we drove fees down during that process. We added these caps where it would create more protection for Ionic. And then another part of the kind of goodies, if you can call it, that we basically contributed as a part of our bid was we had these 16 VUEs, and we said, you know what, like a big part of building sites is ordering long lead time equipment. We have 16 of these. We can leave them at your option to purchase if you want at our cost. We don't make a single penny of margin in between. And if you want to purchase them, then great. And if not, then we're going to use them for our own sites. And so Ionic basically looked at it and said, all right, the buildings, we have to wait for the long lead time items in terms of the steel, switch gears, we have to do a lot of the civil work. The VUEs we can bring online much quicker, and we can bring 40 megawatts online and start energizing miners that are otherwise in warehouses. And so when they bought those, they literally paid our cost basis, and we had to reorder because you guys saw we kind of had to bring Salt Creek online and stuff. So we had to reorder containers, wait for long lead times. And so that was purely kind of a benefit that we offered that was an option to them. And they could have purchased them or not, and we didn't make margin on that.
Appreciate that. I guess if no one else has another question, I'll just send one more. Are you aware of any plans in the, let's say, 1 to 2 quarters moving forward to improve yield and efficiencies in terms of Bitcoin mined? We've been tracking now that Arcam was able to release the wallets for Ionic. We've been seeing a very consistent and predictable decline in output. And obviously with that comes additional costs as you still have to mine. So what is being done to try to turn that downtrend around?
So you're saying, sorry, repeat that. Is the question in terms of Bitcoin production, what they're doing with their Bitcoin treasury? Can you repeat that one more time, please?
Yeah. Are you aware of any plans to improve their ability to produce more Bitcoin at a reduced cost, because we've been seeing a consistent drop in their yield, but they still have to have a substantial amount of uptime on the equipment, which is accruing costs.
Yeah, so I would kind of break that into a couple of different pieces. So today they have miners that are hosted with third parties. I think as a part of driving down costs, bringing those miners into their cell-phone sites would naturally be a part of kind of that conversation in terms of doing so. The second is like the four Midland sites that they have and Cedarvale are all located in West Texas, where during the summers you have higher amounts of curtailment due to higher energy prices drive down that average energy price and due to 4CP. And so coming out of the summers, you'll see higher uptimes that will drive kind of more Bitcoin yield. And then in terms of efficiency as well, right? Like the building we brought online is operating really, really well, and it's kind of creating that accountability across the board. And then I think the last question is like, when is the right time for a fleet upgrade? Is it now? Is it a long time along the side of it going public? Because the average fleet is around 30 joules per terahash, and then at Hut 8 we face that kind of same decision. And the question is, as machines go through repair, is there ROI there to repair those, or do you kind of let them run towards the end of life and then buy new machines? So I think all of those kind of drive towards it, but there is no reason that Ionic is not going to be producing kind of the equivalent amount of profitability in Bitcoin relative to the peers, and if not even better. And I mean, as long as we're there, we're going to continue pushing and making sure that those results align. And I'm not
Yeah.
sure where the coins go in terms of wallets and what their treasury kind of management strategy is, so I can't speak too much to that.
Yeah. Now you touched on curtailment, but as of January of 2024, there was no mention of any active curtailment on either the court documents or their Form 10s. Can you explain, like, is that a new thing that they've been actively doing as of 2024, or is that just a Cedarvale thing? Which sites are actually actively participating and have been able to secure that curtailment revenue versus, the historical is showing no curtailment at all?
Sure. So there's three types of curtailment. One is economic curtailment, which is basically shaving off the peaks. And that was my example of like you can shave off almost 50% of the energy cost by just curtailing 8% of the year in places like West Texas where there's a lot of volatility. The second is curtailment for 4CP, which has to do a lot with your distribution and transmission fees, which are really important kind of fixed costs. And you have to do those during the summer. They're four coincidental peaks. And the last is kind of ancillary and demand response, where you kind of get paid for being on standby. And those programs are all a little bit different. So Ionic has been involved in curtailment, and not just, I mean, this year, even during the bankruptcy. In the bankruptcy, they're actually involved. They actually took hedges at that time, and when they curtailed, they sold those hedges back into the market and so forth. So they had a little bit of a different strategy at that point. But Ionic has been curtailing. We've put our kind of curtailment software on Cedarvale and have been actively managing it and operating it.
Appreciate it.
Keith, you talked to me most on my Twitter, so let's keep on going until more people have questions. You got the floor.
I think you've touched on the main things that I've got right now. I mean, I don't want to make this a me and you space. I think I've been trying to keep it very much on topic for the listeners and for the shareholders.
No, but I think you have, I think, a lot of kind of points on operation, site, etc. So I think look, I don't do these often, so I think any and all questions you have, feel free to ask them, and happy to answer them live, because a lot of people trust you and your opinion, your analysis. So happy to talk through any of it.
I appreciate that. So what is, I mean, I know you can't obviously speak for the Ionic leadership, but what can you maybe share about the leadership's willingness to start sharing more of the metrics and more of the actual data of the business, so that shareholders during this basically listing freeze, as they still do not have an auditor as far as we are aware, can actually start more easily and more reasonably monitoring the business? Because as you know, we have to rely on Archon wallet data to then interpolate what the production is. And, we have to do a lot of the back end work on ourselves, when it could be very easily and, consistently provided by Ionic or yourselves on their behalf. What is their take, if you're aware of any, that they're willing to start moving in that direction?
No, I think that's a great question, Keith. And look, I think that's why you've built trust amongst the community, because you're doing a lot of that work, right? And even me being more active, the reason I wasn't active earlier is like, it's not my place to talk about Ionic publicly, and we have obviously confidentiality provisions in our managed agreements that you guys can see publicly as well. And so I've been sensitive of that. And so before even responding to Twitter comments, I asked John, I'm like, hey, I'm just going to go and answer people's questions if you're okay with it and try to be transparent. I'm not going to talk about anything that you guys have that's confidential or anything that's not my place. But in terms of operations, if you're comfortable, let's just kind of give people the information, and even the spaces as well. And he was supportive. So I think his plan is to start being more active in terms of communicating with the community. And like, I'll continue to push and ask them to do so. But at the end of the day, like, it's not our company, right? I don't have the right nor the ability to kind of disclose what another company wants to disclose or not. And I think like I'm happy that they allowed me to start responding a bit because I haven't for many months. And every time I go onto my Twitter, I have a lot of you guys giving me grief for that. And so I hope that this has been helpful in the last kind of week or two and being a little bit more responsive, showing some more updates. And I'm kind of grateful for them for allowing us and like letting us do so and not kind of pushing back against that. But I think they're probably listening to this as well, or they see me responding, and hopefully they continue to be more active. And I know John, that's a part of what his goals are. And so when I asked him, he's like, look, that's what I'm trying to do as well. So happy for you to do so.
I had multiple conversations with the prior CEO of Ionic and gave a lot of feedback that the community has been asking for, templates for productivity reports, guidance, on different aspects of how to communicate with what the community has been asking for and the shareholders. And what a lot of people continue to forget is these are victims. These are not just your traditional run-of-the-mill shareholders. A lot of these folks they weren't really given much of a choice. They had a vote, but, it was a vote for, get something now or get something maybe, in 5-10 years. So a lot of these are distraught victims, and any ability for them to finally start sharing would be great, because the business started off day one pledging transparency. And, we're 10 months into this and there's been next to no transparency. And so, anything that you can potentially do to kind of provide that support to kind of maybe give them like, hey, maybe provide X, Y, and Z, so that way people can actually start tracking the business a little bit easier than data scraping off their website, 2-3 month old data and having to wallet trace them. I mean, that's a little more work that should be needed.
I hear you, man. And that's why like that's a part of kind of my frustration a bit as well. Because if you actually think about the amount of work that we're doing in like our company, look, this contract for us is $15 million. We're grateful for it and we're excited by the work we're doing. But a big part of us spending the time to do this was because of exactly what you said. We felt like a lot of people got screwed over and it was an opportunity for us to do some good. And because of not having good communication, that's been turned against us on like we're part of the problem set. And if you look at kind of like Hut 8 as a company, look, $15 million is great. We just announced the Bitmain deal, which is a 9-figure per year deal on just our hosting agreement with them, right? It's magnitudes bigger than what the Ionic deal is, and it's only on a 200 megawatt site. And so a big part of us doing this is because we do believe that we can do something good here and we can create value. And I think, look, the prior CEO, Matt, obviously he worked with Hut, and I think a part of kind of him leaving, part of me stepping down was I think they wanted a bit more independence as a company as they grew and not to be as tied with Hut. And I understood that. I resigned from the board. I think Matt saw that like he would never be seen as independent because he had kind of prior history with us. And I think John is able like to do so because we've never known him before. And so these were some of kind of the growing pains that we've had in the last little bit. And look, I'll do my part in trying to get them to be more communicative, which they've already agreed in doing so. And like they are well intentioned, right? They want to do the right thing, and they're trying to, but like there's growth and learning. And I think you guys being active and being vocal is a part of having people listen. And you guys got me to change my tune and be a bit more responsive as well.
Appreciate that, Asher.
Is there any other questions? Happy to answer from anyone.
Do you know if they have an auditor yet?
I think they are. I think they are very close. I don't want to again say anything that it's not my place to say, but I know they've working hard, and I think there's good news around the corner there. So that's great because that's obviously critical in providing liquidity to folks.
Yep. Now, I want to touch back a couple points. You discussed building 4 might be used for something more on lines of hosting. Is that something that's already been in the pipe works, or what's the
So, so
tentative?
I,
Because
Yeah, so I think it's a mix, right? Because they have machines that are hosted with third parties. There's hosting opportunities. There's opportunities for new machines. There's opportunities with kind of what we did with the manufacturer of like a host to buy model. So I think they're running all of those analyses now, and kind of going to drive towards the right answer there.
yeah, and speaking about the modeling, the original model provided to the court back in like March or April of 2023 showed wild disconnect between where the hash rate is at now and even anticipated back then. And then court filings showed that I believe it was either White and Case or the other Kirkling had done November-ish of 2023 new analysis work with the banks and everything. Is there anything you can comment on where the projections are at now, if that's going to get published anytime? Because 200 exahash estimates for 2024 to over 600 is a gross
Yeah.
variance that would massively impact productivity and profitability.
Definitely. Look, I can't speak to Ionic. I'm sure you can understand in the kind of their models and so forth. I can share a bit of my perspective and how we think about it from Hut 8, and hopefully that's helpful. But I think as we think about the market, and you're right, like during the kind of bankruptcy, they had a lot of these kind of third-party firms do a lot of that and kind of put those out there. And so I think like when we think about the market, we look at two things. One is like, what do we believe the average kind of efficiency in the overall network is today, right? And we think it's kind of around like the 30-ish mark when we think about kind of the global networks. And then where do we think the average energy price is? Because that intersection between average global efficiency and average global energy price is probably the equilibrium point of break even where hash price normally falls to without the volatility of Bitcoin. And so I think with hash price, you see it kind of coming down in the 4 cents, sub 4 cent range right now in terms of hash price. And people are surprised, but I think that's interesting because if you have older generation machines like machines with 30 joules, like our average fleet is like 31.7 joules, right? And so I'll actually pull this up now. Give me a second. I have a chart in my office that has these numbers so I can be a bit more accurate. So yeah, so on August 10th, like if you looked at kind of average fleet efficiency, like we were looking at network average, our team kind of created analysis. It was like network average in the world is around maybe 34 joules per terahash. And that was actually, that number came from CoinShares. And so with that, with a hash price of 4.5 cents in August 10th of this year, that's like the average fleet efficiency, the average kind of energy price is around 5.5 cents, and that's kind of like revenue, right? And so when we looked at our machines, which were 31.7 joules per terahash, we were making 5.9 cents in terms of revenue. Luckily in Q2, we had like good energy, so we paid about 3.2 cents on energy. So we had about a 46% gross margin on those older machines. But then when you look at it and you're like, all right, 4.5 cents. But if you have the newest generation machine, like the new Bitmain machines at around 12 joules per terahash, at that same 4.5 cents, instead of 5.9 cents in revenue, your revenue now is 15.6 cents instead of 5.9. So that same exact rack that we had, that old versus new machine, our gross profit at that same energy rate would have been around 80%. Right. And so like I think about the world much more from a perspective of like, where's hash price going to go? Because hash price is an intersection of three things: Bitcoin price, network rewards, transaction fees, and network difficulty. And so if Bitcoin price rips up, you're going to be profitable because hash price is going to rip off for that period of time until difficulty catches up because margins are so high. And then hash price will normalize again at that average equilibrium. If Bitcoin price goes down, people who can't sustain that will drop off the network, difficulty will go down. The reason why difficulty continues to go up, even though Bitcoin isn't, because newer generation machines are still extremely profitable at around 80% gross profit margin if your cost of energy is around 3 cents. And so we look at a lot of those dynamics, and that's why like we're a lot more patient when we think about purchasing miners and the structure in doing so, because you're spending hundreds of millions of dollars potentially in buying machines, and you want to make sure that you're not making a decision at any one moment in time and you're thinking about the actual depreciation cycle of those machines. Because unlike if we were mining gold or something else, where we can hedge out those production revenues and we can hedge out those kind of production numbers in the long term and we can hedge it, then great. You can't hedge hash price, right? There's some markets that are like not as mature. You can maybe hedge out 6 months. There's not that much depth, but until that exists, like you have to make fixed capex decisions on a volatile top line energy or top line revenue numbers. And so that's why I think being more bespoke and creative in how you grow is really important in terms of how do you actually be competitive and drive a good return on investments in this industry.
Appreciate it. And I know I'm kind of like shooting these quick at you, but another question I had. So back during the when the exam report was released, they showed that the 4 existing sites, not including Cedarvale, had major issues with power distribution, power receipt, and they at one point were sitting at almost 11 cents per kilowatt hour. That eventually dropped into the bankruptcy down to around 6 cents. But they were still having power, distribution problems. In terms of those existing sites, not Cedarvale, how is the power distribution been fixed? Are they managing to get their uptimes up? They were suffering at around like a 67% average uptime at those facilities. And has the energy rates been reduced even further, or are we still looking at about roughly the 6% mark or 6 cent mark?
Yeah, so I mean that where they're located should be able to be similar pricing as anyone in that kind of region, right? And I mean to put into perspective, we're getting a lot of kind of heat for our cap of 395, which I'm saying we're coming under, and we had that price kind of allocation towards it, so we're having to build under 326, which we're on track to do. Like those sites were built for around 600,000 a megawatt to put into perspective, and that's all public records in the bankruptcy filings. And so I think just kind of quick perspective there right now, because they're keeping us accountable and everything, they have someone kind of still operating those, the same kind of counterparty that was still operating those during them. We're helping them kind of manage and pull out the data and so forth. And so we're kind of like they're figuring out the best way to kind of operate those sites in with us relative to other folks. I think they're trying to create optionality because obviously there's been a lot of noise around how it's expensive, is it worth it, and so forth. And so we're not fully operating those sites. We're helping them in terms of strategy and managing, but we're ready to go to operate if we need to, since it's a part of our agreement and we're kind of ready and willing to do so. But in terms of power dynamics, like those sites curtail as well. I don't have the exact kind of like power cost off the top of my head, but it's definitely not like 11 cents or 6 cents. Like it's a lot more competitive, and so a lot of those distribution things have been solved.
Okay, and are you aware if the uptime has been improved over the 67-ish% that it was averaging throughout 2023?
I think the uptime has gotten better, but again, like we do not actively run those, and so those are one of those things, Keith, where like it's not really my place to talk about uptime on their sites, right? Like I can talk about the building one that we're operating that we're proud of, but I just want to be like respectful and like have some boundaries so I don't get in trouble for sharing things that are not our place to share.
No, I appreciate it. That's fair.
Look, I think if you have, yep.
I'm saying there's got to be somebody else that has a question at this point.
Yeah, right. I think we're hitting the hour mark as well. So I'll wait a minute or two for any other questions that are out there. But I think, Keith, look, you keep on doing what you're doing. And like, I know you're doing it out of like protecting all of the creditors. And so I respect what you're doing. And look, we're all coming from the same place and wanting to drive value. And the whole reason we did this in the first place was we thought we could create some good out of a bad situation. And like, the 15 million is not what drives me in my day. Like I have to go create billions of dollars of value for our shareholders. And so I hope you guys see the amount of time I'm spending on this is not for the dollar amount of this contract, but because this, I think, is a lot bigger than just what this contract entails.
Well, I think as long as, this level of communication, the new photos that don't require me to send somebody out with a drone to go snoop at the sites, is a gross improvement compared to before. I appreciate the fact that you allowed me to ask questions. I think folks have been trying to get a lot of these answers, for a long time. So we appreciate that you stepped up when others have
Yeah,
not
look,
been
and
so
I'll
willing to.
I'll I'll try to find that fine line, right? Like I have to honor their confidentiality, it's their business, and I've gotten approval to kind of share these as long as it's kind of public and it's about operating data, about things that we're building. So I think to the extent I can continue to kind of manage that fine line and not do anything that is not okay, like I'll continue to try to be vocal and communicative and share cool updates as they happen.
I think that's primarily what everyone's been asking, just
Yeah.
not needing to take a satellite or a drone to go see the sites is a gross improvement.
I hear you. Definitely. So we'll share more. I appreciate everyone on their time for being on here. I think we had a good amount of people here. We're recording this for anyone who wants to listen that couldn't make it. And feel free to ask questions, hold accountability, and hopefully people will be happy as we continue to kind of execute and show up.